Imagine this. You're traveling the world, and in every country you visit, you walk into a McDonald's and order the exact same thing, a Big Mac. But there's something strange. In one country, your Big Mac costs $2.50. In another, it's $5.75. And in some places, it's over $7 for the same sandwich. Same ingredients. Same brand. Same experience. So why is the price so different? Now, you might think, well, everything is just more expensive in some countries. And that's true. But what if I told you that this simple burger is actually one of the most powerful economic indicators in the world? It's called the Big Mac Index, and it's one of the easiest ways to understand currency value, purchasing power, and why some countries are rich while others struggle. How does it work? What does a burger say about inflation, exchange rates, and economic power? And more importantly, what does this index reveal about where the world economy is headed next? Stay with me, because by the time you finish this video, you'll never look at a Big Mac the same way again. Why a burger became an economic indicator in the world of economics. Most indicators are complicated. Governments use complex equations, financial analysts obsess over interest rates, and traders stare at graphs trying to predict currency fluctuations. But in 1986, The Economist magazine decided to simplify everything. Instead of looking at complex formulas, they asked a simple question. If a Big Mac is made the same way everywhere, shouldn't it cost the same everywhere? But it doesn't. And that price difference? It tells us something about the value of different currencies. The logic is simple. If a Big Mac costs $4 in the US but only $2 in another country, that suggests the other country's currency might be undervalued. On the other hand, if a Big Mac costs $7 somewhere else, it might mean that country's currency is overvalued. This is how the Big Mac Index was born. A quick, easy way to compare the true value of currencies in a way that actually makes sense to everyday people. But here's where things get interesting. What happens when the index reveals a country's currency is undervalued? Do prices adjust? Do governments intervene? And what does this simple burger predict about the future of global economies? We've already uncovered the secret. The price of a Big Mac is more than just a number on a menu. It's a hidden indicator of currency value, a way to compare the cost of living between nations, and a tool that has exposed economic problems before they even made the headlines. But what happens when governments don't like what the Big Mac Index reveals? What if a single burger can predict economic manipulation, currency devaluation, or even financial collapse? This isn't just a theory. It's already happened. Let's explore how the Big Mac Index has uncovered hidden truths about global economies, and how some countries have tried to fight back. The Big Mac that exposed China's currency manipulation for years. The United States and China have been locked in a battle over currency manipulation. The accusation? The US claimed that China was keeping its currency, the yuan, artificially low to make its exports cheaper. A weaker yuan meant that Chinese goods were cheaper to sell abroad, while American goods became more expensive. But how could anyone prove that China was deliberately undervaluing its currency? Enter the Big Mac Index. When The Economist compared Big Mac prices worldwide, they found something suspicious. A Big Mac in China was significantly cheaper than in the US, even after adjusting for cost of living. According to the index, the Chinese yuan was undervalued by more than 40%. This gave the US government ammunition in trade negotiations, and it became one of the pieces of evidence used to pressure China into adjusting its currency policies. But China wasn't alone. The index has revealed similar currency manipulation in multiple countries, including Switzerland, Argentina, and Russia. And speaking of Argentina, the Big Mac Index exposed one of the most bizarre economic cover-ups in modern history. Argentina's Big Mac conspiracy. Hiding inflation with a burger. Inflation is one of the biggest economic problems a country can face. It erodes the value of money, makes goods more expensive, and can destroy people's savings. And few countries have struggled with inflation as much as Argentina. By the early 2010s, Argentina's inflation rate was skyrocketing. Prices were rising so fast that the government started manipulating official statistics to make the economy look better than it actually was. But here's the problem: they couldn't control the Big Mac index. Since McDonald's is a private company, they set their own prices, making it impossible for the government to manipulate them. So what did Argentina do? They pressured McDonald's to artificially lower the price of Big Macs, not to help consumers, but to make their country's currency look stronger in the index. Instead of selling Big Macs at normal prices, McDonald's was ordered to sell them at ridiculously low prices, lower than other menu items like cheeseburgers and fries. The goal? To trick the index. Of course, this didn't last long. The manipulation was exposed, and Argentina's real inflation problems eventually caught up with them. But this story proves just how powerful a simple burger can be. When even governments try to manipulate a sandwich, you know it holds real economic power. And this raises an even bigger question: what does the Big Mac index reveal about the world today? Are we heading toward another global economic shift? Is your country's currency stronger or weaker than it should be? And most importantly, what can this index teach you about where to put your money? Now we'll uncover what the Big Mac index says about today's economy, and whether another financial crisis is on the horizon. We've seen how a simple burger has exposed global currency manipulation, revealed economic lies, and even forced governments to intervene. But what does it say about our world today? The global economy is shifting. Inflation is rising. Currencies are fluctuating. And if history has taught us anything, the Big Mac index might already be predicting the next big economic shakeup. What does the index reveal about which economies are stable and which ones are on the verge of crisis? And more importantly, what does it mean for you? Let's break it down. What the Big Mac index says about today's economy. The latest Big Mac index has revealed something surprising. Major currency imbalances are forming across the world. Here's what we're seeing. Hamburger: the US dollar is stronger than ever. According to the index, many foreign currencies are undervalued compared to the US dollar. This could make American exports more expensive while making it cheaper for Americans to travel abroad. Hamburger: the euro and British pound are weaker than expected. The European economy has been struggling with slow growth and energy crises, and the Big Mac index reflects this by showing that their currencies aren't keeping up with global prices. Hamburger: Switzerland is the most overvalued country. A Big Mac in Switzerland costs significantly more than in most other places, suggesting that the Swiss franc is highly overvalued compared to the US dollar. Hamburger: China's currency remains undervalued. Despite trade tensions and economic slowdowns, the index still suggests that China's yuan is cheaper than it should be, making Chinese exports more competitive on the global stage. Hamburger countries with high inflation are seeing their currencies collapse. Nations like Argentina, Turkey, and Venezuela have Big Mac prices that fluctuate wildly, reflecting rapid inflation and a loss of currency value. The Big Mac index is more than just a fun way to compare burger prices. It's a real-time indicator of economic power shifts. And if you understand it, you can use it to make better financial decisions. How the Big Mac index can help you protect your money. You might be wondering, okay, but what does this mean for me? Well, if you pay attention to the Big Mac index, it can actually help you make smarter financial choices. Bank travel and living costs. If you're considering moving or traveling, the index reveals where your money goes the furthest. If a Big Mac is cheap in a country, chances are the overall cost of living is lower too. Upward trend: investing in global markets. The index can hint at which currencies are undervalued and might strengthen over time. If a country has an undervalued currency but strong economic fundamentals, its stock market could be a great investment. Money bag: protecting against inflation. If you see the price of a Big Mac rising quickly in a country, it's a warning sign that inflation is hitting hard. This could mean higher costs, lower purchasing power, and potential financial instability. The index isn't perfect, but it gives us a simple way to see which economies are thriving and which ones are struggling. And with so much uncertainty in the world, understanding these shifts can help you stay ahead. Final thought: are we on the edge of another big economic shift? The world is more interconnected than ever. When one currency collapses, it sends shockwaves across global markets. When inflation spirals out of control in one country, it affects prices everywhere. And right now, the Big Mac index is showing signs of major imbalances. Is this just another shift in global economics? Or are we heading toward a currency war, an economic crisis, or something even bigger? No one can predict the future. But one thing is clear: sometimes, the answers to the world's biggest financial questions are hiding in the most unexpected places. Like a burger. Fire. If you found this video eye-opening, hit like and subscribe for more deep financial insights. Speech balloon. What do you think the Big Mac index reveals about today's economy? Let's discuss in the comments. Loudspeaker. Turn on notifications so you never miss an update on global financial trends.